All right, well, let's dive in here. I'm very excited about this. We've done a lot of work, a lot of our homework, a lot of our research. And the goal for today's session is to help you prepare for fall 2023. And what are a couple of simple, achievable, tactical steps that you should take now in order to make fall a success? What might you want to do? How do we actually put that in practice? And so on and so forth. A couple of quick housekeeping notes. So as usual, this is good for 1.0 CFRE credits. This is your first session. You'll learn that at the end of the session, we'll drop a survey in the chat. That survey it'll allow you sort of document your existence here. So make a note of that. Again, it's possible that you get audited. So just do this and we'll back you up. I would guess that about once a month, someone reaches out to us and says, hey, I've been audited, help me out here. And we do that. So that's what that is. A couple other notes. So let's go. Here's the agenda. We'll do some very quick intros. We'll talk about some of the fall trends in recent years and what we saw in the past and what Q4, the beginning of Q4 looks like. We'll talk about a couple of insights to consider. This says 6. I think we might actually have 7 or 8 because we had some last minute additions and some early steps to take right now. So that's what the ride's going to be. Hope you enjoy it. At any point, feel free to drop some questions in the chat. We'll keep an eye on that. If you have comments or thoughts, drop those in as well. If you just want to say hi to everybody, do that as well. Great to see our friends from the Food Bank for New York City here as well. All right. So my name is Patrick. Lucky to be the co-founder and co-CEO of FreeWill, pictured here alongside Jenny, who's awesome. Jenny's out in Seattle, Washington. I am as far away as can be, although not intentionally, down in Miami, Florida. So if you're up in Miami, shoot me a note. We can say hi. And a lot of the work that you'll see here is research done by a lot of our team. So we're closing on an $8 billion raised for charity, a shade under 200 amazing folks, a little over 1,200 nonprofit partners, including many of you. So if that's you, big thank you from the bottom of our hearts. And we'll come back to that book. So we are giving away a book. Doesn't look like it's listed there. And it is called, what's it called? Radical Kindness, I believe. So we'll drop a link to the chat there. It looks like the slide wasn't updated. All right. So we asked you, let's make sure we're getting an updated version here, which I think is what's up. All right, this is a lot better. Great. Let's come back to this. I was wondering why that wasn't there. All right, so this is the book that we're going to send to 20 of you. It's called Deep Kindness. Pardon me, it's not Radical Kindness, by Houston Kraft, to 20 people as a gift. And it's a real thoughtful reflection on us and how we walk through the world, through our work, through our relationships, through our friendships, through our family. Really great book, very, very well reviewed. And so if you'd like a copy of this, just make a small note and let us know where to send it. So that's that. So that, by the way, will show up in the survey again at the end of the chat. So at the end of the session in the chat, we will drop a link to a survey. So that's where you get a copy. All right, so how's your week going? A couple things to note here. Generally, people feeling pretty happy still, which is good. Would be surprised if the start of summer didn't have something to do there. Not a little bit of anxiety, but not a big lift. But then otherwise, one thing that's interesting is when we ask you how confident you are about hitting your goals this year, we are down for the second week in a row, down from a sort of all-time, we're close to an all-time high in May. So if anyone has thoughts on why that is, would love to hear them. Since we last hung out 2 weeks ago, we had a debt ceiling deal, averted almost certain economic catastrophe, general stock market up, general crypto markets up. We'll talk about that in a moment. A couple other things. So be curious to know if anyone has on views on how to do this. A couple of people in the chat are asking about the book. So at the end of the session, we'll drop a link in the chat to a survey. Fill out the survey, including your address. So don't worry about that. Now, thank you, Phoebe, for making that clear. All right. So what's happening in fall fundraising across the whole nonprofit sphere? And the first trend is that you see a really strong events-based fundraising back in 2022 after a couple of very slow years for obvious reasons. In 2021, only 3.5% of nonprofits said they plan to fully shift back in-person events. But in 2022, that was very, very different. So 60% of organizations we surveyed last year were hosting in-person events at the end of 2022 or in fall 2022. 87% of nonprofits who hosted a virtual event also reached brand new donors. So what we saw here is that it's not necessarily either or, and a lot of people are using virtual events to reach folks who couldn't make in-person events, and also in-person events for people who love being in person. More than 92% of both virtual and in-person fundraising event attendees are likely to donate in addition to any registration costs, so that's a big deal. And more than 40% were giving more than $100. So you do see some significant value here. If you're a local organization, there are ways to be thoughtfully doing this without driving too much cost. But we also saw this trend in 2022 in Q4 that it was down from 2021, which is relatively unusual. We tend to be on a pretty steady march upwards. The biggest decrease was donor participation among those who gave a first-time gift in 2021. So a lot of folks sort of dropped off the map in 2022 after giving in 2021. Also, if you sort of rewind your brain a little bit to October, November of 2022, one thing that was going on was the midterm elections, which was getting a lot of pressure for donations to political candidates, obviously among both parties. So donors of all political stripes were getting hit up a ton by top tier Senate candidates, gubernatorial candidates, House candidates, et cetera. When we look at this, and this graph is a little bit confusing, so I'm going to break it down for you. You can see here the month-over-month change in monthly donors across the board. And so what you see here is that blue line at the bottom is 2022. And so what it means is it was about 2.5% lower than the previous January, but by the time we get down to December, we're about 12% lower. Now you see 2020, there was growth, but there was decline for most of 2021 as well. So just naming this is a pretty big deal. Third trend we're looking at is we are now entering the beginning of a general election cycle, and particularly the Republican primary. So the Democratic primary, as far as we know at the moment, looks relatively non-competitive, although you had a new entrance yesterday in Professor Cornel West. But the Republican primary will drive a lot more donor attention for those of you that have more conservative donors. There are already 7 candidates, 2 more expected to announce this week. That is 7 of sort of the mainstream candidates who have held a significant office before. Obviously, there are dozens more. Other trend that we're seeing is that donor retention is down, and so are small dollar donations. So new donors gained in 2021 showed a significant drop-off rate in 2022, and last year's donor retention rate was 42.5%. It was the lowest on record. So there's a lot of work we need to do on donor retention. Individuals contributing less than $500 make up 83% of all donors by number, and most of the decrease in giving comes from this segment. So we're really struggling as a sector with small dollar donors giving less money in 2022, and we're going to talk about some steps to take there in 2023. Another trend we're seeing, Kelly, that drop was in number of donations, so good question. The interest in will making and plan giving spikes in the spring and the fall. So this is largely due to a couple things: springtime campaigns and efforts, National Make a Will Month in August, which really raises the profile of it from August, September, October, National Estate Planning Awareness Week, which is October 16th to the 22nd. It's also the case, by the way, that you just see less interest in estate planning during the holidays and during the peak summer months, right? So especially June, July, people are a little busy with family. December, January, well, especially sort of November, December, a little bit less interest in estate planning. People are busy with other things. They tend to get their affairs in order. The one exception here is August, which actually tends to be the all-time best month for estate planning. It's Make a Will Month, and a lot of people push it. It turns out people have a little bit of extra time in August to get that done. Yeah, that's a couple of the big trends in giving. I want to talk about some insights about sort of the broad landscape of the fall and what that's going to mean for fundraising here. So the first one to note is that inflation, as you might imagine, still plagues Americans, rose by 4.2% in April compared to the previous year, making the highest year-over-year increase in a decade. for in April. Consumers are feeling this, mostly paying for housing, transportation, and food. Yes, inflation is slowing a bit, but it's still sort of quite high compared to modern, recent historical norms. Most people haven't felt the effects yet. And what we really mean by inflation getting better is it's slowing down, not that prices are decreasing. So you're still feeling a lot of that pain in your wallet. Many are still recovering from the last 2 years of inflation. 54% of US adults, so more than half, said their budgets have been affected a lot by price increases. So as we start to look at, we'll talk more about this in a moment, what is driving a decline in small dollar donors, it's pretty good evidence that this plays at least some role here, right? That people are feeling a little bit squeezed generally across the board. Important to remember that not everyone is affected equally by inflation, and the majority of wealth here is in America is not cash. So your cash donations, your small dollar cash donations are going to be the ones that are most affected by inflation. Some of the other things may actually benefit from inflation. We'll talk about that in a second. It does create barriers for cash giving. It weakens the power of donations. So even holding steady, you're still falling behind, and it influences donor behavior. So second piece here that's really interesting, and I think this is one of the least understood drivers of lower donations from smaller donors and fewer donations. So we just talked about inflation and how that's putting pressure, but it's putting pressure on folks at the exact moment that retirements in America are really picking up. So the percent of the US population that is retired is almost 20%, which is a pretty dramatic shift from even a few years ago. And while inflation is still down, it's still squeezing the folks who are watching their budgets more because suddenly their incomes have been shut off and they're living off of investments. Could this be the decline in could this be driving the decline in small dollar donors? Yes, I think it certainly plays a role here. Because what you see here, right, why are people retiring? Well, pandemic accelerated that shift, right? Some people said, oh, I don't really want to go back into the office, or a little bit of downtime maybe want to do it, or a contracting labor environment made it a little bit more appealing to get out. But we look here, and as we have this, we talk a lot about this great wealth transfer and the aging of America, and look at how quickly the percentage of Americans who are over 65, which in common parlance is about retirement age, shifts. So in 1970, it would have been 10%. In 1950, it would have been 8%. By 2000s, you see that leveling off. Why is that? That's because the relatively small silent generation is getting older. And then by 2010, you start to see your earliest boomers cross that threshold. And we go from 13% to 17% in 2020 to 21% by 2030, which means right now we're hanging out at about 18, 19% of Americans over 65. So suddenly our donor base is moving from being 60-ish to being 68, 70-ish. What's the big difference there? People that are still working versus retired, right? And if you actually look at the percentage of the US population that's working age across the board, you see this really big drop off in 2020, right? And sort of peaking or beginning to start dropping off when the boomers start hitting 65. And the secret of this graph is that this graph ends in 2020. If you look at 2023, that number is all the way down to 61%, right? So that's what's happening is you have an aging America, and we're really thinking about reworking some of our donation strategy plans to address the fact that many of our donors are retired to a degree that was not true 5 years ago, right? So we have to start to rethink how this is working. Thank you, by the way, for hanging out with me on some sort of macroeconomic and demographic trends. We think this is really important. It's a little nerdy, but it's really important to understand. Insight 3, as I mentioned, the estate planning really peaks in the spring and the fall, but also we're starting to see a bit of a shift in an uptick in overall interest in estate planning, period. Now, inflation is influencing how people prioritize estate planning, which isn't obvious. 1 in 4 Americans say inflation has caused them to see a greater need for estate planning. Now, why would this be? And really sort of, we dug into this, and it's really 2 things. So the first thing is, the economic pressure that people are feeling from inflation means they're more worried about their kids or their grandkids and their ability to thrive economically. And so some of it is a sort of altruistic view of how do I help subsequent generations, because boy, we're feeling squeezed, right? So that's the first reason. The second reason is that, for those folks that are retired, that are in middle age, this is a home ownership generation. And so one of the things that's driving inflation is housing prices historically. Now we've had a little bit of a dip in the last few months, but really we're so far above 2014, 2015 levels that people are looking up and saying, wow, my house is worth a lot of money on top of my assets. I really need to get a handle on estate planning because the price of all this is going up. And as inflation hits, right, what else is happening? Well, that estate tax threshold doesn't change with inflation. So more and more people are above it based on home wealth or other things like that. So I hope that's a little bit insightful. Continuing on this, we still see the case where only 34% of Americans have a will that's up to date. And the top reason people haven't completed their estate plan is procrastination. So we still see a little bit more interest, more people doing it, but there's still a lot of folks that are waiting on the sidelines. So there's a lot of opportunity to get those folks off the sidelines, which if you're you is important, because without estate planning, there's no plan giving. And most of you know that that's going to be the biggest gift anybody ever makes. This issue, by the way, isn't unique to low-income Americans. More than half of folks making over $80,000 a year, which is well above the national average. Those folks also name procrastination as the main factor preventing them from having a will, right? Humans are humans across a lot of things. More people in 2023 said it was important to have an estate plan compared to 2022. And 64% said it's somewhat or very important, right? So what we see here is that people are primed in the fall to think about estate planning, and we'll talk more about what to do with that. Insight 4, corporate giving is up. So you might not have expected this. It grew by 24% in 2021. Major corporations intend on expanding their workplace giving programs. This is becoming more of a norm in attracting millennial and Gen Z talent, right? That's why this is happening. Yes, corporations, some of them are generous. For the most part, it's a talent attraction and talent retention strategy. So more and more of this happens, but also, and this may be a feature and it may be a bug in the systems, $7 billion goes unclaimed every year, right? So that's just money that is sticking with corporations instead of going to charity because these gifts are unmatched. And this is just free money that we're missing out on. So we'll talk about that in a moment as well. Trend 5 is that stock ownership continues to be up. So it is the highest it's been in 15 years. And the S&P 500 hit a 9-month high this week. 2/3 of adults between 30 and 49 report owning stock. So this is a big shift, right? These are your older millennials and your younger Gen Xers. These folks are very hands-on with their investments, right? Something like 40% of millennials check their investments every single day. Awareness of tax benefits of donating stock is also at an all-time high. So people are getting more savvy as they sort of just spend a lot more time thinking about the stock market, mutual funds, their investments across the board. This is very, very good news for giving because this type of giving tends to be much larger from the same people who would otherwise give you cash. So that's really good news. You see here stock ownership annual trends, and you see how much it's up across the board. So helpful to see. What you see here is actually started to have this decline in the Great Recession in 2008, and now people are sort of, all the way back. Among Gen Z and millennials, as I mentioned, they're beginning to acquire stock. According to Fidelity, 4 out of 10 new clients who opened accounts in recent quarters were 18 to 35. So you have a big, big entrance in the stock market from this group. Why is that accelerating? Well, first of all, they're going to get more money. But we've also talked before about the great wealth transfer, right? Because it's so powerful for charitable giving. But also most of that money is going to go to younger people. So you're going to see a really big increase in millennial wealth. And a lot of that's going to go into the stock market. Insight 6, donor advised funds are going to be even more important this fall than they were in 2022. Our math and our sort of best estimate is that we're going to see about $70 billion from DAF grants in 2023, which means roughly 1 in every 5 donor advised fund dollars, 1 in every 5 giving dollars for individuals this year is going to come from donor advised funds. When we ask about sort of, one thing to reflect on is how many DAF gifts you've already gotten in 2023 and what that looks like. Giving Tuesday, we started to see DAF grants exceed DAF deposits. First time it's happened since 2018. And in total, $3.1 billion from Giving Tuesday across the board. This is a 15% increase. So Giving Tuesday is really picking up, and we're going to start to see more and more gifts on that day as well. The other thing is that this is really important, because what happens is you have a generally sort of cynical media. I don't mean that in a bad way. It's just bad news is sort of more interesting than good news. And the economy is surprisingly strong when you actually look at the hard numbers, right? So jobless rates at an all-time low. Now, why is that? Part of it, companies doing well. Part of it is more retirements. So there's actually fewer people for some of the same roles here. But after a pretty rough year for the stock market in 2022, the S&P is already up 11%, and it's only June 6th. This is on pace for roughly 25% growth for the year, which would make it an outstanding year. Now, let's be super clear. This is not investment advice. I'm not a stock market prognosticator. I'm just telling you what the pace we're on is and what has historically been true up until this morning. I think it was actually up another 0.6, 0.7% this morning before we updated the slides, and 11% growth. So some of you are sort of still stuck in late 2022 mindset of everything going down, and it was a rough year, but we're sort of kicking back pretty hard right now, and you see this going across the board. So very quickly, what types of gifts are most affected by stock market increases? And feel free to put your own guesses in the chat. And I'm thinking particularly about three types of gifts. So we've got some major gifts, stocks that are down, QCDs, a couple of things, major gifts. Yeah. Great. Requests. Look, I mean, one of the things you see here, the guesses are all over the place. They're all generally true. So a strong stock market correlates very heavily with stronger giving. It's really, the three ones that we think are going to be most affected here are one, stock gifts. This is the obvious one. That was your gimme for the class, right? The second is donor advised funds. Why is this? Because the money, right, the end of 2021, there was something like $236 billion sitting in donor advised funds. Most of that money is invested in mutual funds, right? Sort of tracking the general market. And so you can imagine that if you take X amount of money, let's call it $100 billion in donor advised funds, and somebody's coming in, somebody's coming out, but an 11% lift in the stock market might correlate to $10 billion more in those donor advised fund accounts, because these are all invested. And so this plays a really big role. So perhaps that 70 billion guess is a little bit conservative in terms of what donor advised funds are likely to do. And the third is some of you mentioned, so very smart folks on the call, are qualified charitable distributions. These are gifts out of your IRA, right? And most IRAs are also invested in mutual funds pretty heavily. So stock market goes up, right? And the amount of money in there goes up. The amount of what we call the requirement of distribution goes up over time, as a higher percentage of that is in there. Now that the RMD won't really shift until the beginning of next year, but you still see just generally more money in the funds. And so QCDs are going to be up by a lot. Also, we haven't talked much about crypto. Crypto is sort of a really big topic in 2021, a lot less so after a rough 2022. There are the two most popular crypto coins in the United States are Ethereum. So many of you have heard of Ethereum. Everyone's heard of Bitcoin. Ethereum is actually the most donated coin in the United States. Why is that? It tends to be a little bit more useful in the States, where Bitcoin actually tends to be sort of shadow money in the world, in places where sort of the local currency might not be as trusted or as reliable, et cetera. But Ethereum is up 58% year to date, which if that was the stock market, it would be by far the best year that anyone's ever had. And Bitcoin is up 64% year to date, right? This is from January to June 6th. I mean, this is how astonishing this growth is. And so this we'll see a comeback in this type of giving as well. All right, so some early steps to take. What are we actually doing now, right? What do we need to do in this moment to be ready to have just a much stronger year than last year? First things first is we want to prepare our education for non-cash gifts now. We want to make sure that donors know there are tax advantages to donating non-cash gifts like stock, QCDs, and DAFs. We want to let them know in advance, as opposed to just when we're asking for gifts at end of year. We want to educate them on what they need to submit in order to do these benefits. And donors tend to be pretty busy, so the more that we can simplify the process, the better off we'll be. We also want to make sure to mention whether there are state or local tax credits. And so you want to know here, right, especially if you are a state-specific or a local organization, let's make sure that we're up to date on, does our state have capital gains taxes that would be avoided if we gave that stock? Are there other deductions for charitable giving, et cetera, right? What's the charitable deduction in our state for charitable giving on top of what that looks like, right? Here's what the capital gains map of the United States looks like. This one's updated as of 2018. I don't think much has changed. If it has, I apologize, but always go double check in your own state. And you can see here, right, at the top capital gains rates in a place like California is more than 10%, right? In New York, Minnesota, Iowa, Oregon, it's 8 to 10%. New Jersey, it tracks often very closely with the income tax rate. In a lot of places, capital gains are taxed like ordinary income at the state level. You see the places that are 6 to 8%. Places that are 0% tend to correlate pretty highly with the states that have no income tax. Tennessee, Florida, Texas, Alaska, where they're still living on oil revenues, Nevada, Washington State actually is the one area where I think this map is wrong. Washington State, I believe, and someone can correct me if I'm wrong, has recently instituted a capital gains tax, although it still has no income tax. South Dakota as well. So thanks for the backup there. All right, so that's one, right? We want to make sure that we're sort of up to speed on that when we're talking donors. Step two, we're targeting our QCD donors early, right? QCD, qualified charitable distributions. These are tax-free gifts out of a traditional IRA. Donor can start making them when they're 70 and a half. Why are we doing this early? There's a cap every year of $100,000. We want to get there first. These are very, very good gifts for seniors to make, or anyone over 70. Not everyone over 70 would want to be called a senior, because they lower the taxable income instead of increasing deductions. For those over 73, they meet what's called the required minimum distribution, which is the amount of money you have to take out. So these tend to be the best gifts for folks over 70, really valuable. And including these in the fall is really important before you get to end of year. What we saw in our research is that organizations that marketed QCDs at least 3 times, small, large, medium, were 3 times more likely to receive at least 10 gifts, right? And remember, these gifts can be $4,000, $10,000, $100,000. So they're really meaningful. So that's really, really important. We want to make sure we're mentioning tax savings to increase charitable interest. When you ask donors what they care about, they don't say tax savings. When you run experiments to see what actually drives behavior, tax savings really does play a role. So make sure you're doing that. And we're adding urgencies, right? These gifts have to be transferred by the end of the year. Other things to know. It is never too early to remind folks about QCDs before they give elsewhere or before they take their distribution and use it on something else. So being proactive, of all the gifts, this is the one to be most proactive on, is QCDs. Deb Feinberg says, isn't the age 72 for RMDs? Deb, it's actually 73, it just got shifted. But you can start making gifts out of your IRA when you turn 70 and a half. So multiple touch points help you to get better end of year. So that's 2 on QCDs. On 3, plan your what we call NEPA campaign now. So NEPA is National Estate Planning Awareness Week. It's October 16th to the 22nd. So mid to late October here. And it's probably the last chance to capture legacy interest in any meaningful way before the holidays. What happens after October 22nd? Well, the annual funds campaign starts getting hot and heavy, a lot less room for plan giving. This and Make a Will Month play an enormous role in driving gifts. So this is a really good time to do it. Also, the idea that we're all doing it together at this time really breaks through that urgency and breaks through that procrastination that people say is the number one challenge here. Other things to think about, right? Remember that this interest in estate planning is spiky from inflation, and it's spiking in the spring and the fall. So there's a lot of wind in our sails here. And here's some sample language from the Oregon Humane Society, right? So in honor of National Estate Planning Awareness Week, we're pleased to share a new estate planning resource with FreeWill. You can use FreeWill, you don't have to. At the Oregon Humane Society, we believe that everyone needs a plan in order to protect the people and the pets they care about, plan beneficiaries for their assets, creating a lasting legacy. If you don't have an up-to-date plan, you can use this tool, et cetera, et cetera. Now is the perfect time. And it's really this sort of call to action to make an estate plan that also allows people to make a planned gift if they want to. But actually, this is more effective at generating planned gifts than an email that's only about leaving money to your organization. So that's really valuable. Step 4, we want to ask donors about employee matching gifts now, right? So well before they get busy at end of year. Encourage them to inquire with their employer whether they offer a gift matching program. Many employers do. Many employees don't know about this because work is busy. And when you're starting a new job, there are a lot of things to think about, right? Nearly 80% of donors say they don't know whether their company offers them matching gifts, but 1 in 4 would donate a larger amount if the match was applied. And all of them will get a match, gift if we'll double the gift in terms of the impact if there is a match. So this is really, really valuable. And many companies, not all, but many companies will match things like stock donations or grants from donor advised funds. Now, these tend to be a lot larger, and so that match is even more valuable. Corporate matching gifts can be a great opportunity to maximize fundraising efforts and really generate even more gifts, right? So you all know this, but they'll match the gift often up to a certain amount. So it's not the case that you give $1 million, but usually it's up to 5,000 or 3,000 or 1,000, depending on the organization. And remember that $4 to $7 billion goes unclaimed per year, and this is just free money for your organization, right? Same donor, same amount. All you have to do is make sure that happens. So what we recommend here is something we call the Ask Your Boss email. So this can go out early fall, right? Well before giving season. And it's a short email. It's sent on a weekday, probably a Tuesday or a Wednesday when people are working and at the office, talking to their boss, talking to their other folks. And you don't actually need to include a donation ask. Why is this? Because we're setting in the fall, we're getting people to think about matching gifts and getting people to think about giving down the road. So this can play a really big role. So here's a little sample of what that email looks like. When we send you the slides later today, you can just copy and paste it and use this. So subject line, will you ask your boss today, right? Good subject line. People are going to open this. And then you say, hi, John, Sarah, Mary, Jennifer, whatever. At the Land Trust, we're always trying to help people have a bigger impact on preserving nature at less cost to them. Over the years, excuse me, we've realized that a lot of people don't know that their donations can be matched by their employer. So we want to ask you today, will you ask your boss or your HR team if your company matches gifts? And if yes, what are the rules around matching? This way, you'll know before your next gift to any of the causes you care about, right? So this makes it a service for any of your giving, not just for the Land Trust. Thanks so much. And now some of you are thinking, well, this is great, but Patrick, you just told me that we have more retirees than ever in our donation file. So why would we send this out? Well, you can send this out, but this postscript here, it says don't have an employer or don't have one that matches gifts. Click here to check out other smart giving types that help you have a bigger impact at lower cost. So now we're doubling up this sort of educational level, and there's something for everybody here, right? So this can be really useful, get people in that mindset, and suddenly you're doubling some of these donations down the road because folks know that the gift is going to be matched. So great question. So step 5, we're going to have the talk, right? The talk with our annual giving team. And one of the things that we're seeing as we see millennials and Gen Z and Gen X pour into stocks, as we see more and more people become eligible for QCDs, as we see donor advised funds on the rise, as we see crypto coming back, is that one of the keys to effective annual fundraising, right? Small dollar individual giving in 2023 is baking in all these non-cash efforts into all of your fundraising efforts instead of only doing a couple of educational pieces, which are still very important. And you don't want to wait until year end to do this. Here are a couple of talking points. And by the way, this is for those of you with larger organizations. Some of you are the annual giving person, the major giving person, the plan giving person. So this is something just to reflect on for yourself, right? If you're not having this chat with other people, but really important stuff. So what are our talking points? First things, we know that research shows that orgs that focus on non-cash gifts grow 6 times faster than those who don't. Non-cash gifts are better for donors because they often generate much larger tax savings. Another way to say this is that cash is worse for donors. And asset giving reminds people of their wealth, meaning even the cash gifts are larger, right? So if you're a major giving and you're having this chat with your sort of individual giving small dollar people, right? Remember, it's going to help them hit their goals, not just your goals, their goals. And the action steps we're taking are we're adding non-cash giving options to the donate page. We're adding what we call the magic sentence. I'll show you this in a second, to our fundraising emails. And this is what that looks like, right? So it's, will you chip in, right? You have your normal fundraising ask here. And then we add a note that says many people choose to give from their assets, stock, gifts from their IRA, cryptocurrency, grants from donor advised funds to see even larger tax savings. Now, what are we doing here? We're reminding people of their assets, right? Which is going to generate higher gift amounts. And we're reminding people of these giving types, which are better for them and going to also generate bigger gift amounts, right? So it's a real win-win for everybody, for you, for your individual giving team, and for your donors who are saving a lot more on taxes this way. So this tends to be really, really useful. When we talk about opening up avenues for donors to give, you see here a great example of having it on your donate page, a bunch of these different actions as well. And then one bonus tip before we get into some questions and gone a little bit more quickly today is I want you to take a moment today, tomorrow, next week, whenever, and examine the suggested amounts on your donate pages. Now we're back into cash giving here, but this is an important piece. There was a recent experiment, not that recent, a couple of years back, and Russell James wrote this up, so I want to give credit to him here. And the experiment used 60,000 fundraising appeal letters from a hospital. And they had a response card, but what we're going to learn here is going to be useful for our response cards in direct mail and for our websites, right? So I hope you can pay attention for just a moment. And the standard thing that they'd always done, they said, okay, do you want to give $10, check, $50, $100, or enter your own thing, right? Pretty normal across the board. Then they had an alternate version which said $10, $50, $100, $250, $500, or enter your own thing. And what happened here? That second version raised twice as much money per letter than the first version did, because our anchor point is higher in terms of what normal people give. Okay. Now, there's a really interesting component here where they also use some cards that had only 2 options or 3 options: $10, $500, or enter your own stuff in here. And that anchoring to a higher amount actually plays a really big role in driving average donations up. Now, an important piece here is that this is not the same thing as pushing all of the options up. Why is that? Because when you increase the smallest option, it has a downside, and it makes a smaller gift seem unacceptable. You can imagine if this said $250, $500, or blank, people aren't comfortable writing in $20 because they feel like, oh, that's not an acceptable gift. Instead, I'm not going to give it all. So if you push the lowest option too high, it takes away the share of people who give anything. But if you push that top option up, it generates a higher average gift without reducing the number of people who are giving, right? So this is a very simple tweak, right? Just put yourself in the shoes of this hospital, right? They're busting their butts. They're writing the perfect letter. They're getting it approved by, all the powers that be. They're shipping it off to a fundraising direct mail factory, right, or a print house, right? They're paying for all that postage, and by adding a couple of those extra numbers, right, they either had half as much money or twice as much money, depending on what they did there. And so we're looking for these things that are small, almost effortless tweaks that are suddenly going to drive, really outsized results, and that's what we're really looking for to help you out here as well. So Kathy said, so did the 10 to /500, it also raised twice as much. as the first one. So roughly the same amount as that second version. So good questions there. All right, so those are the tips that we have for you today. I hope that's all really useful. We try to make it as practical as possible so you can sort of rip it and use it when you get the slides. Feel free to copy us as much as you like. A couple of resources I want to share. So first things first, and my colleague Phoebe is going to drop. Thanks, Phoebe. My colleague Phoebe is going to drop a note, a link to the survey. It should be in there now. So thank you, Phoebe. If you get a chance, click on that right now. It'll take you about 30 seconds to fill it out. First things, we're giving away this book on deep kindness. I hope you like it. Let me know what you think about it if you get it and read it. If not, it's obviously available at all of your local independent bookstores. And just make a note with that and the address. So please do that. Second thing to note is that not tomorrow, Thursday, we are unveiling a totally new product for FreeWill for the first time in a long time. Totally new product. And we have designed plan giving websites, which are actually visually stunning and beautiful. So our team has put a ton of work into this. We'd love to show it off. If you'd like to come, this is your formal invitation to join us on Thursday at noon. Probably going to be about half an hour or less. Pretty straightforward, pretty awesome. We'll show you it. We'll sort of hand out a demo site for you to poke around on your own. It's very cool. The sites look far better than I expected they would. To be honest, our digital services team has done an outstanding job. So we'd love to show it to you. That's on Thursday Eastern at noon, 47 hours from right now. So do that. And as I mentioned, we have a lot of amazing tools around non-cash giving, around driving plan gifts, and now plan giving websites, which are also pretty great. So if you're interested in that, just make a small note in the survey and we will have someone reach out to you today. So that's our next steps. I'm going to answer a couple of questions, but first I want to actually note that much like today, we're going to do a session in 2 weeks on best practices for nonprofit website design and content. So it's going to be very hands-on, very practical, looking at a bunch of different websites, what they do right, what they do wrong, what are those small tweaks that you can make to have much better outcomes with all the hard work you're already putting in. So come join us for that. You can also RSVP there as well. It should be really fun. And with that, let's answer a couple of questions. And then I think we can end a little early. Sorry, you can hear my voice going. I gave a keynote talk, which was super fun in Utah last week, an hour-long speech at Elevation. Certainly did a little bit of a number on it. Laura says, is checking stock market impacted by the ability to check on your phone? This is a really interesting point, Laura. And now I don't have any research, but logically, I think you're exactly right. So what happens? You have a generation that has grown up with technology, right? We're talking about millennials here for the most part, to zero in on them. And the idea that anytime they think, well, I wonder how my investments are going, they can check, with a sort of a thumbprint or a face unlock, whatever, and see within a few minutes. And I noticed this. I was in New York last week, briefly, get to see my family, and excuse me, I'm on the New York City subway, and we're out of seats, so I'm standing. And those of you that don't know this, that haven't seen me in person, but I'm very tall. I'm 6'4", so I can sort of like see over the whole crowd, and like 5 of the 10 millennials on their phones are checking their assets. You can see the little graphs. I'm not looking too closely for privacy reasons, but you can see how hands-on people are, and this feeling of like checking and being smart investors and getting up to the minute views. Millennials are beyond sort of the last generation to really remember, the young generation to really remember life before the internet. They're the first generation to have smartphones as they started investing, which wasn't true of Gen X, wasn't true of baby boomers or silent generation, certainly. And so they've grown up investing in a smartphone culture, which is very hands-on, and things like Robinhood or even modern, the sort of modernized versions of Charles Schwab, et cetera, really play into this role. And so you can see when we think about things like donor advised funds, things like stock giving, that sort of very hands-on approach is really appealing to millennials. So very, very cool. That's right. Carly says she's Gen Z and checks everything on her phone, including including investments. Great question. Sue says, I'm fairly sure you've mentioned in the past that we should encourage our donors to name us as their DAF beneficiaries on several occasions. I had this conversation with a donor and they were surprised they could designate us as their beneficiary. Do you know how these work at organizations like Fidelity and Schwab? Do they just default their DAF beneficiaries to their in-house funds? So this tends to work a lot like your 401k beneficiaries or other things like that, right? Where it tends to be a simple form. And many of this is available online. So this is a really important point. When we think about beneficiaries for donor advised funds, there's really two avenues. You can name a new person that's not you to start making grant recommendations, and that can happen. You know, many people will say, I want my child to continue this giving pattern, et cetera, et cetera. But also you can just choose to leave all or a portion of it to a charity. And so that tends to be, I believe it's available online in the DAF portal for Fidelity, Schwab, et cetera. So great question. Jason, does anyone have a great how to donate page? Jason, come back in 2 weeks. We'll walk through a couple good options. Sorry, I don't have them for you at the ready. Alexa, some websites offer a link to a tool that lists employers who offer matching gifts. What is this tool and how do we access it? Alexa, there's a company called Double the Donation. We have no sort of formal affiliation with them, but they tend to be really nice people. And I believe that is the most common tool around matching. So great question. When listing the suggested donation amounts, do you think it makes a difference if the amounts are listed from high to low rather than low to high? I have seen no evidence that it makes a difference. So if you find some, please let me know. And maybe one more question is, we're a small nonprofit. We don't do any of this, but we want to. We have a very small staff. Where can we go to get better educated on all these vehicles? So if you go to the sort of nonprofit resources page, you can go to freewill.com and click on for nonprofits. We have a ton of templates, guides, research studies on DAF gifts, on stock gifts, on QCDs, on plan gifts, et cetera. Really straightforward, really simple, written as clear as we possibly can. And so that ends up being a great resource. We actually know that some relatively large organizations use those tools in their onboarding process for new employees just to help them get up to speed. So, all right, well, let's pause there a little bit, 8 minutes early. We'll give you some time back. If you haven't already, please fill out the survey. We would love to have you come on Thursday. We think these are really impressive. Can't wait to sort of play show and tell with you guys on Thursday. And if you have any, also in 2 weeks, we'd love to have you at this best practices for nonprofit website session that we're going to do. And if you need anything, you can find me on LinkedIn. You can shoot me an email at patrick@freewill.com. Always happy to hear from you. And thank you so much for being here. Happy summer, happy Pride Month, happy June, happy Father's Day to those of you that we won't see before that happens. Really just glad to be here and hope you enjoyed the session.